Hello, everyone, and welcome to the Suzanne and Sarah YouTube channel. I'm Suzanne.
And I'm Sarah.
And today we are going to talk to you about 6 reasons why you want an investor-friendly lender on your team. Hello, everyone. Welcome to the Suzanne and Sarah YouTube channel. I'm Suzanne Moore.
And I'm Sarah Willis. We are Central Oregon's investment and real estate experts.
As I said, I'm Suzanne Moore. I'm a realtor in beautiful Sunny Bend, Oregon with Realty One Group Discovery and the founder of the Central Oregon Investor Network, which brings together investors not only from Central Oregon, but from all over the country to network, share resources, and create more freedom in our lives through passive income from real estate.
And I'm Sarah Willis. Suzanne Moore and I are a team. We put together these videos on a weekly basis on investor, real estate, and Central Oregon lifestyle topics and bring them to you here on our YouTube channel. You are also going to want to screenshot or hold your phone up to this QR code. We scour the market on a weekly basis and bring you Ben's best deals straight to your inbox if you sign up for our email newsletter. And before this video is over, please like and subscribe.
So let's talk about why you want an investor-friendly realtor on your team. And just to orient you with what we're going to talk about today, we're going to talk to you about different loan types, 6 reasons you want an investor-friendly lender, and how to vet them, so the questions to ask, and then we'll talk about next steps. So first of all, we want to talk to you about real estate financing, so you understand the 3 types of loans and financing situations that you will find when you talk to your investor-friendly lenders.
The first type of loan we are going to talk about is the primary residence loan. And this is qualified as where you reside. This is where you live full time, or at least most of the year. This is considered to be the lowest risk from a lending perspective. And ultimately, this is where you're going to have to put down the lowest down payment. There are multiple types of loans for your primary residence that range anywhere from as low as potentially 0% on some like VA or USDA type loans, all the way up to, as much as you want to put down, obviously. But these are going to bring you the lowest interest rates and usually the best terms possible.
The next one is residential investment. So this is anywhere from a single family home that you rent out all the way up to a 4-plex and everything in between. And this may or may not be owner occupied, but in this case, we're talking about non-owner occupied. So that means somewhere that you don't live, it is strictly an investment. It's a rental. So generally with residential investment properties and loans, the lender will require 20% down at a minimum. Something to keep in mind, there are some special loan programs and lenders that we know that will do this for 10% down. So the other thing with residential investment is that there are oftentimes slightly higher rates than residential owner-occupied or your primary residence, and sometimes you have to pay points for residential investment loans.
Next up is commercial investment loans, the next category. These are considered multiplex units with 5 or more units or other commercial types of real estate. These are also never, in this case, they're non-owner occupied, and they are also even a higher risk than the prior one we just talked about from a lending perspective, because it's easier to walk away from it if things go south for you. So these generally require 25+% down. Again, just the higher the risk, the higher percentage you're going to have to put down for the lender in most cases. And also just higher interest rates and more points that you're going to have to pay for in order to get these types of loans. Usually higher risk, higher reward. So more skin in the game for everybody.
Now we're going to talk about the 6 reasons why you want an investor-friendly lender on your team. So leverage. The reason that investors use leverage is because it benefits us. It benefits us financially with things like tax savings. So we get depreciation on our property, and we can also write off things like mortgage interest, points we pay for a loan, and some other lending costs that come in our closing statement. Using OPM, which means other people's money, also helps us get a higher return on our investment, especially cash on cash return. So we use leverage as a way to have a higher return on investment, to save our cash for other things so that we can maybe buy more investments, or we can put that money into rehabs or renovations. So these lenders understand why we want leverage, and they help us do it.
All right, reason number 2. Lenders that are investor savvy understand their limits, right? How many loans are you allowed to have at once? The conventional wisdom is that you are allowed to have a total of 10 loans maximum on the books, right? This is what shows up on your credit report. Regular residential lenders may not know that. So this is where it's important to have people that are savvy to investing and investment real estate on your team. Residential lenders may limit the number of loans, as we've discussed, whereas if you're going through a more private funding source, or someone who understands your debt to income ratio is a little bit more nuanced than the regular person, then you may have a little bit more wiggle room here.
Reason number 3 for choosing an investor-friendly lender is that they are creative and they think outside the box. Why do you want a creative lender? Well, you want someone who looks at things a little bit differently and can problem solve 4 or 5 steps ahead. So an example of this would be helping to improve your debt to income ratios so that you qualify for another loan. And they're not messing with the numbers per se, but what they're doing is, perhaps one example, they're saying, okay, it looks like you've got some student loans on the books. Why don't we pay those off to reduce your debt to income so that we can deploy that in another investment? Another example would be like, hey, maybe we should pay off your car loans or your HELOC to free up that debt so that we can use that in a real estate investment. So those are some creative solutions that might help you qualify for that next loan by fiddling with your debt to income ratios. Another angle of creativity that these investor-friendly lenders use is aligning with your tax advisor. Why is that important? It's important because there are ways that you can report your rental gains and losses so that you can either qualify for loans, show more income, show more write-offs, whatever goal it is you have. They can work with your tax advisor to ensure that what shows up on your taxes helps you in future qualifications for loans.
Reason number 4, LLCs. You want a lender that understands why you might want to put your property into an LLC and limit your liability. And investor-friendly lenders understand why investors want to keep their assets in an LLC and keep them separate from their personal assets. If you have a renter in place and you get sued, your LLC is going to protect you. In a lot of cases, when you're dealing with lenders who don't understand this reasoning, or you come to the table and you try and take out money under an LLC, it might complicate things. So there are different rules under Fannie and Freddie that are going to limit when you can transfer your deed or your loan into an LLC. And it's just important for you to be upfront with your lender that this is something you want to do, because if there isn't the communication, or your lender doesn't understand your reasoning for this, it could trigger the due on sale clause in your mortgage contract. And obviously that would put you in a tricky situation. So an investor-friendly lender may be able to help you make this transfer without triggering that due on sale clause.
Reason number 5 that you want an investor-friendly lender on your team is because they have unique loan products that meet your goals. Unique loan products, you might think that all lenders have the same loans, basically the same rates, and that is absolutely not true. And that is why we recommend having, if not 2, then 3 or more lenders that you speak with to try to understand what different products are out there that meet your goals. So what is a unique loan product? Well, one thing could be a lower down payment investment loan. And as I said at the beginning, we do have a lender partner that we work with and recommend to many of our investor clients that only requires 10% down for a non-owner occupied residential investment. So that's anywhere from 1 to 4 units. They also don't charge private mortgage insurance, which is usually what happens if you're paying less than 20% down. Why does this matter? This matters because that reduces the cash out of pocket for your loan. And instead, you can use that money for a renovation or a rehab if you're doing a flip or a BRRRR, or if you're doing a vacation rental, you can use that extra 10% to furnish and decorate your property and really make it stand out online. So things you're looking for if you want to preserve cash are a lower down payment, lower fees, also looking for things that don't have PMI, which is private mortgage insurance. The things that you will see sometimes on these unique property or unique loans is that maybe there's a balloon payment. A balloon payment means that the entire remaining balance of the loan is due sooner than the amortization of the loan. I'm going to explain that. So let's say you have a 30-year loan, but it has a balloon payment after 10 years. So that means your payments are spread over 30 years, but after 10 years, you got to pay the rest of the balance to the bank or the lender. And the way you would do that potentially is to refi or get another loan, or perhaps just pay it off. So you're looking for different options. Amortization is another one. So that's how far out your payments are spread. So that makes them lower or higher if it's a shorter amortization. And all of these unique products help you achieve your investing goals, whether it's cash flow or appreciation, or maybe both.
Reason number 6 to find an investor-friendly lender. They can aggregate your loans. They can help put your loans together so you do not have to abide by that 10 loan limit. Ways to do this are creative solutions. There's something known as a blanket loan or a blanket mortgage where you can basically take one mortgage and it covers several at a time and it's only counted as one. Alternatively, there's portfolio loans, which are loans that are kept in-house and they're not sold off to bigger lenders and the government like Fannie and Freddie. And so they are not recognized as part of that 10 loan limit. Or there's also private money. And private money loans are, again, just kind of be off the book loans. They're going to be ones that if you go to apply for a conventional mortgage somewhere are not going to be as obvious on your credit report. So all of these come with their pros and cons, tend to probably end up paying a little bit higher interest rate for some of these more private money loans or portfolio loans, paying more points, something along those lines. But it helps you spread your money further in the long run.
Now we know the top 6 reasons why you want to have an investor-friendly lender on your team. So now you might be asking yourself, okay, I'm convinced I want one of these people on my team, but where do I find them? I need some resources. How do I do this? Well, we have some answers for you. Who do you ask? You can ask us. That's why we're here. We can help you find investor-friendly lenders all over the country. It doesn't matter if you're in Central Oregon or Central Tennessee, we got you covered. We can connect you to lenders that do loans all over the country and will help you with those creative solutions and different ways to approach it depending on your goals. You can also ask your network. If you are an investor already, you probably have other investors. Maybe you go to investor meetups and connect with other people. Ask your network. There's probably a lot of people out there that have great lenders that they like. So do your homework, call them, and we're going to give you a couple questions to ask them in just a second. The last resource you can look at is Bigger Pockets. This is a great resource for investors, new and seasoned, and there's lots of folks on there that can help you find different loan products and help you achieve your goals, whether you're investing in Oregon or beyond.
So when you do find those lenders and you do go vet these people and you're kind of interviewing them to help you out, it's important to ask good questions and listen to their answers. And this is going to help you understand whether these people actually know what they're talking about or not. So some of these questions that you may ask is, how many loans can I have with your company? As we talked about, there's this conventional wisdom of a 10 loan limit, but maybe you'll get a different answer from these people. What type of loan programs do you offer? Do they have one of those 10% down loan options and not having to pay PMI? I don't know. You just have to ask. What is the minimum down payment required? As we talked about with some of these multifamily units or investment properties, minimum 20% down, but we run into people that's 25, 30% down as well. And some of that has to do with your own credit score and your own DTI as well, ratio. So these are just questions to ask. Do you consider existing rental income when underwriting a loan? If you have rentals already in play, or you are looking to purchase an investment property that is going to have rental income coming in, there's the possibility of using that income towards your income against your debt, and this will help you qualify for a larger loan. Some lenders allow for this, some lenders don't, and there's usually an equation involved in this. When will you work with my tax advisor to help me make the most of my investments? It's really important to have this communication between these two professionals. It's just one of those important things. Are your tax professionals, of course, going to know the most about your background and going to be able to communicate most effectively on your behalf? What are your reserve requirements? Oftentimes, especially with rental properties, you're going to have like a minimum of 6 months down for or 6 months in reserves or in your bank account to cover your mortgage payments. If you, in the event that you default, they just want to make sure that you have this on hand. But everybody differs a little bit. Could be a little bit less, could be a little bit more, and it really just depends on your financial situation, what's going to work best for you. Do you sell the loans or do you hold them on your books? Again, this is one of those things where this is a portfolio loan. Oftentimes, if you can find someone that holds on to your loans and doesn't sell it, you can get a little bit more creative with that lender. Is there a loan minimum or maximum aggregate dollar amount loan limit? Again, can you put these loans together, make an umbrella? Yeah. And can I transfer the property to an LLC? This is something, again, you just want to communicate about ahead of time. And that way, if you want to move your property from your personal name to an LLC, everybody is informed and you're not going to breach your contract and trigger having to pay your entire loan before it's actually due.
Well, that is a wrap for today for the 6 reasons why you want to have an investor-friendly lender on your team. As I said at the beginning, I'm Suzanne Moore, a realtor with Realty One Group Discovery here in beautiful Bend, Oregon.
And I'm Sarah Willis. When you are ready to buy and sell your investment properties, hit us up, let us know, and we will connect you with these investor-friendly realtors, and we will help you every step of the way. Remember that QR code. We send out weekly email with our top picks on the best investments here in Central Oregon. And if you are looking in this area, it's something that you do not want to miss. Please like and subscribe, and we will see you on the next video. Thanks for watching.
Thank you, everyone.